What's up, guys? It's September 14th, 2023. I'm going to talk about MES and the uptrend today. As always, we'll start with yesterday's context, then we're going to break down the first six bars, talk about the trades, and the context with the EMA. Yesterday was nice for the bulls. It's a clear double bottom, which led to today's uptrend. This is a big time frame double bottom. And a 5 minute, I guess technically it's a higher low, excuse me. Let's see. You know what's funny is yesterday I was like, the bulls have a gap open, but I doubt it's gonna. I was like, I don't think it's that strong. And then today we get a full-on gap up uptrend. That's funny. Yeah. So look, this is a hint that the bulls are strong from yesterday's context. Sell off, huge. We do have a double top, but it's kind of a shady looking double top. Like, it's like wicky, strong bars on both sides. Then they sell. Bulls make a higher low, not by much, but enough to kickstart an uptrend today. So we'll get into today's context here in a second. I remember yesterday's video like, that's not a lot, and then look at today. That's funny. That's funny to me. So the first bar is a gap up, which we all know by now. This is a bull bar. This is an interesting statistic or stat or probability, whatever you want to call it. When there's a big gap up or gap down, if the first bar of the day is a opposite bar, I guess you could say, so if a gap up with a bear bar, there's a 30% chance that this can be the high of the day, and vice versa. With a big gap down, if the first bar is a bull bar, there's a 30% chance that there could be the low of the day. I like to take that chance, and I do trade that bar from that specific reason, but I'm ready to hit out because it's only 30% chance. That means there's a 70% chance of you being wrong. I like to trade around probabilities, so I'll take that probability because catching the high of the day is rare, and it could really set up for some nice cushion. Okay, back to the first six bars of the day. The first six bars are telling, so I'm going to start focusing on the first six bars and how that we can read that for the rest of the day. That's how it was explained to me, so that's how I'm going to practice. First six bars of the day. We have a gap up, and it's immediate bear bar. A big bear bar, too. It's a range bar. We have tails, so with a body, so this is a range. Bull bar into a bear bar. Bears are shorting highs. Bulls are not willing to buy high. Could be a limit order market, but we have to wait to see if the bears get follow through. There's no follow through. Next bar is a bull bar. Bulls are buying the bear bars. Bears are shorting the bull bars. So this is a limit order market right away. I set limits around the 50% level, bar one. Here, 80% of breakouts fail within a range. And I think I'm trying to learn how to spot traps. And if 80% of breakouts fail in a range, and this is a strong gap up, this is a gap up, then this could be seen as like a wedge bottom bull flag. And I think that with this trap right here, do you see this bar closed 1 point below this? That means these bears who shorted bar 4 got filled. The market sold off twice, but they didn't get there. I think their PT would be the EMA. So they hit out, and bulls are seeing a wedge bottom, and they buy low for this bull flag. 80% of breakouts fail in a range, and we're at range lows. We push up into range highs, and I added into my position on top of this bar to the short side, and look, we sold off at range highs. So this is a limit order market, not a trending opening. We could range. That means, the first six bars are telling. So if it's the limit order, there's a chance for a range. Everything's probabilities. When I say these things, it doesn't mean tomorrow if there's a limit order market, it's a range day forever. It just means, be on alert. These are clues. We're picking up clues. So I'm thinking limit order market, and I sell off into the SPY. MES sells off into the EMA. We take profits, and I think bears also get trapped here. I think they start shorting, playing for this gap fill, which is what drove the uptrend. Is I think bears wanted to play for the gap fill. So I think that fueled this uptrend today because I was playing for the gap fill. I thought that was very reasonable with this bar, with the first bar and this bar. That looks like the gap would get filled. So that's the first six bars. Limit order, sell off into the EMA. Bulls keep the gap open, and we see a strong bar right away off the EMA. So bulls are willing to buy high, and also, I think that's the 50%. So bears cannot push the, remember, 50% level. If bears get a close, expect more if there's a continuation bar. There's no continuation. Yeah, they close a bar below it, but there's no follow through. We snap back into the range, and bulls take off. We see steady buying into it. This is a tight bull channel. I would not be looking to sell anything in this, at least not until a trend line break. Tight bull channel, breakout. We can look for a measure move up. I did not have this PT up, but it would be reasonable to look. Oh wait. That's the breakout. So your PT would get hit. A measure move of the morning breakout would get hit. Tight bull channel, steady buying for about 1 hour. My mind is already telling me I'm not selling because this channel is too tight. This channel has a trend line break, and bears sell back into the EMA and tap it. This EMA lined up with a breakout point from bar, I think that's what I say, like 18 maybe. Ooh, bar 15. I was 3 bars off. From bar 15, bars 27 was a breakout test, and it was a doji. I try not to buy dojis, but this is a breakout test on the EMA. Strong bear channel. Strong bull channel. First sign of trend line break is a good trade to at least the trend extremes. Bar 34 met that objective and then some. So buy, we scale in, we go again. We have a bull flags between bars 29 and 32 with a breakout on bar 33. Bar 34 is climactic. Let me delete these. I try and keep only the lines I had up while I was trading. I had 10-point increment lines today. So here we are, the flag. Bulls push up and make another. I have to figure out how to fix my chart for 10-point increments. You guys will see it later. So bulls push up, and this bar is climactic. I remember watching it happen really fast and a sell-off, and I got out on bar 36 because it looked like a climax, bear bar, and a doji. Not good follow-through for the bulls. But then they get their third leg, steady buying, bars 40, 39 to 41. Here we have multiple legs. We have, if we say this is a spike, pullback in channel, which is how I was reading the day, a bull spike is a breakout on another time frame. So we don't want to be shorting this because this is a breakout bar. This is just a bar. This is just a bull bar slowly filling up on a larger time frame. So why would we short that? And then it pulls back. This is an Al Brooks terminology. It's the spike, pullback, and channel. So we have a spike, a pullback, and we have a bull channel for the rest of the day. It becomes buy low, sell high. This channel is broad enough for you to sell the top of it back to the lows, and it was respected. Let me turn off the EMA real quick. So here we are, leg 1, leg 2, leg 3, and bears get a double top. And this is bearish pattern at range highs, at channel highs, and we sell off to the channel lows. This was also a 10-point mark. I remember this trade because I bought it because it was a 10-point mark for 4,550. I had a buy order set here, and I went for another 10 points, and I got out around the 60 level, which was really nice because SPY moves in 10-point swings. So if you don't, SPY moves in 10-point swings, and if you're gonna trade this, it's very important to understand that and go with the flow. I've been fighting that for a very long time, and just today I accepted it, and I had a very calming day in terms of entering and taking profits. It was a bull trend, so that makes it easier, but with 10-point swings, they happened all the time. And this was also a 10-point swing, by the way. Hold on. No, it wasn't. No, it wasn't. I don't know why I thought it was a 10-point swing. Okay, excuse me. I guess it wasn't. But it was 2 legs down. 1, 2. We got multiple legs within that. And bulls get another 10 points. Off the channel lows to the channel highs. Right there, see? And look, there was so many trades today for both sides. This is a credible trade to short the climax and expect a test of the breakout. And if you get a test of the breakout and it failed, so So this breakout, the test for the, this is a test, this is going to get confusing. That's what it's about to get. Okay, let me, so this is the breakout bar, okay? This bar right here, we're just going to say this is bar 1. Just bar 1 is the breakout bar. Bar 2 is a bear reversal bar. Do you see how this bar broke bar 1's low? So this is a failed breakout test for the bulls. The bulls want to break and retest, and it failed for the bulls. This is a good test for the bears. The bears are testing if there's any buyers below bar 1. There's no buyers below bar 1, so they go for a measured move, and that target is met. So the bull test, it failed. There are no buyers. The bear test, it passed. There are more sellers below bar 1 than bar 2. Since there are more sellers below bar 1 breakout climax bar, it's acceptable to go for a measured move. But this is the climax situation. I'm very scared like people will just start shorting the uptrend and then come back. Coffee and candlesticks said da. No, it's like, remember yesterday's video? Context. You'd have to watch this bar form to understand it was the fastest, and you can see it's the biggest, but it was also the fastest bar. Like, I felt the energy, like, yeah, it's almost done. And we've been range bound. Remember over here, 80% of breakouts fail in a range? It's the same thing here. 80% of breakouts fail in a range. Clean up this chart. We were talking about counting leg 1, leg 2. So leg 1, leg 2, leg 1, leg 2, leg 3 for the bulls, leg 1, leg 2 for the bears, leg 1, leg 2 for the bears, micro leg 1, leg 1, leg 2 for the bears, larger, so there's like legs within legs. Leg 1, leg 2, trap. 1, 2, trap. Bulls get this push up, push down, leg 2. It's a little confusing, but look, there's just leg 1, leg 2s everywhere. Leg 1, leg 2. Let me use the tool for this. Leg 1, leg 2. Leg 1, leg 2. Market order, so something like that. Leg 1, leg 2. That's a hard one. That's a hard one to get. You're really stretching, but it does get met by the tip of this doji. You wouldn't get filled with a limit order because it has to go through to get filled, so you might have to close out manually. And then yeah, third flags fail. Third flag is not reliable within a range. Leg 1, leg 2, leg 1, leg 2. I don't know if this was the same chart. So if you market order, you've missed. Oh, yeah, if you market order, you missed. If you measure from the pullbacks, it's met. We didn't measure any of these from the pullbacks, so I don't think I would measure this from the pullback in the moment. You know? It wouldn't make sense. Like, that's me just looking at the chart saying, oh, yeah, it lines up. But real time, if we're hitting stop entries all the way in, then it's going to be something like that, and we may take a hit, or we're quick enough to see the breakout fails, scale in lower, get out on a pop. So leg 1, leg 2, high probable trades that line up with 10-point swings is kind of what I'm on the hunt for now. It's really cool. It was eye-opening trading like that. Yeah, the market is moving in 10-point swings right now. It's always moved in 10-point swings the way it was explained to me. So just understanding that and understanding how to maneuver around that with price action. Today was an uptrend, it was buy low, sell high. I think it was fairly easy. Let me see something. Leg 1, put it on the pullback. Okay, leg 1, leg 2 was not met, but let's go body to body. Still not met. Put it below the pullback and it's met. So leg 1, leg 2 is all over the place. Look, and if we see this as a projection, leg 1's fibs are, there's a specific word, but like they're projection indicators, whereas an EMA is a lagging indicator. So we were looking at the 50% level before we knew it was the 50% level. And look at that bounce right off the 50% level right here. Because we didn't know that was to be 50% of the leg 2 range. See? But it still respected it. So that's kind of how you can test your measuring and things. It's like, if I measure from here to here, is the market getting respected? No. And this is after the trade has taken place. Obviously, you're going to keep practicing. Like how I keep switching between a stop entry leg 1, leg 2, or a pullback here. Both are getting respected. In the real-time trades, I can't figure out which one's which. So I've straight up just put both. I put both like that and just been like, okay, somewhere around this bar is a good area. You know, this is a conservative exit, and that is a really good exit, or this would be better. But I'm kind of playing around like that, and this looks confusing with the lines. I don't want people to think like, oh, line, short, line. Those are just 50% levels, okay? That's just to understand a little bit better what the day is looking like, if it's a range day. So there's lots of ways to play the day. Sometimes I made a list on this video to make sure I wasn't going off on tangents, and I still think I went off on a tangent. So I'll bring it back. You know, we had an uptrend. First 6 bars were a limit order, but we broke out into a trend. Spike and channel. Spike, tight bull channel, deep pullback into a broad bull channel. And bears did make money today, just not ideal. It is not ideal, you know, because if you're going to short this, if a bear shorts this, he probably shorted this. You know what I'm saying? Maybe he didn't short that because that's a lot of buying pressure. So it was hard because you don't make money here. You do make money here, but you go short, average down, get out for a few points because that wasn't even 10-point swing. I hope you guys learned something. I'm really going to be focusing on making sure these videos have some sort of consistency. We're going to talk about the day real quick, talk about yesterday's day, talk about the first 6 bars, and then talk about the markets in context with the EMA. I hope you guys learned something and have a good day. Don't forget to use your stop loss.